SMB Investor with Nick Bryant and Sean Smith.
Hey everyone, got Sean Smith here, Managing Partner of Search Fund Ventures, and this is the SMB Investor Podcast. Today I'm joined by Ricky Bouchard. Ricky's got a really great background across small business ownership with his family. He's an expert in insurance and investing in other small business owners. So with that, I'll let Ricky kick it off and give a quick overview and intro on himself.
Cool. Thanks, Sean. Yeah, so Ricky Bouchard. I'm based in Tampa area. I've been very fortunate to be put in this position to where I'm able to do stuff like this and provide some value and meet some really cool people along the way in this niche SMB growing world. So happy to be here with you.
And tell us a little about, how you got started investing in SMBs and also some of the unique perspective you have, especially given your background in insurance and growing businesses.
Yeah. So I'll tell you kind of a little longer background and the story of how it all ties together. So I grew up in this area just outside of Tampa and ended up moving back here right after I graduated from UF, moved up to Atlanta, had a job up there, ran its course, got married in the process. Me and my wife decided we wanted to have kids, and if we were going to have kids, we were going to be closer to family. So it was going to be here or Orlando, where she grew up. And it made a lot of sense for it to be here because my family has had an insurance agency in town for a long time. I was interviewing for Bouchard Insurance, other places too, and they asked me, they're like, all right, what other job opportunities do you potentially have? And I mentioned being a sales guy, being a broker at Bouchard Insurance, and they looked at me and they're like, hey, idiot, go take that job. That's a really good job for you. And so after being told that enough times, I finally did. I joined what at that time had really outgrown a family business. I still had my brother-in-law, a couple other family members, my college roommate working there. So a lot of good friends and support system that I walked into. Ended up figuring out that business a little bit and having some success in it. And in that process of being down here, I got introduced to a friend of a friend. So my old sales partner when I was working in Atlanta was good buddies with this guy named Sam Rosati, who is Twitter famous guy in this world now. And so I just became social buddies with him. And it had made sense to sell Bouchard Insurance, which was a fortunate financial event for me. My book of business in insurance was small to mid-market commercial accounts, right? So a lot of contractors, a lot of manufacturing, a little bit of like behavioral healthcare in there too. A lot of stuff that honestly fits within the SMB ETA searcher, independent sponsor type of world. So Sam had a deal under LOI one day and he calls me and just says, hey man, I've got this deal. We need investors. And are you interested? And I told him I have no clue how to do this stuff or what it means and what is normal and not normal. He said, well, do you want to learn? I was like, well, yeah, if you're willing to be super patient with me and generous with your time. And he absolutely was. And so, from his standpoint, he had said, I can go raise money from other people, but I just rather do this with my friends, right? I just rather do this with people I want to be working with. And so I said, well, sure. Yeah, man, I'm in. Because I also knew that Sam was and still is significantly more risk averse than I am. And so I'm like, well, if Sam's in, then I'm like triple in, right? I just trust him carte blanche with that stuff. And he said, don't trust me, right? Learn how to do your own diligence. And so that's been a work in progress over a number of years, but that was probably about 4 or 5 years ago, that phone call. And so a manufacturer here in town that we're still involved in. And that is what brought me into this world and this space.
Very neat. I love that story because you've had a pretty organic path into investing in, these lower middle market deals, both from a family background standpoint, but then the types of companies you covered in insurance and then connecting with Sam and the folks in Tampa. So that's neat.
Yeah, it's been definitely natural, which is a good thing because I got pulled into it when I was ready to be pulled into it or when it was appropriate, right? Like I didn't go work in investment banking. I didn't work in private equity. I didn't go get my MBA, right? So everything that I've learned has been because I made mistakes or because I lucked into making a right choice or because I stole the information from guys like you who know what they're doing.
Well, that's all artists steal, right? That's
the
saying. So how has your approach evolved over time? You and I talked about this like a week ago, but I think it's great to share that journey of how you created a real disciplined approach.
Yeah, it's certainly evolved and I like to think gotten better over time. And I like to imagine that another 5 years from now, it'll be different and and better still, started just like literally where it's like, well, if Sam's in, then I'm in, right? It was literally that, which is honestly not a bad rule to follow, but I've gotten more specific with what I do, how I do it, the way I treat it, the way I communicate it to searchers and sponsors who are looking to bring on money. And so I've really narrowed in, what I would call is my buy box. And what I've done is, I've really kind of cherry picked the stuff that generally has fit my old book of business or my current book of business in the insurance world. And that is multifold. First of all, it's just the businesses that I know, right? So I've been working with electrical contractors now for 12 years. I know a lot of people that own an electrical contracting business. I've seen evolutions of their business. I just get it more, right? So understanding the industry type has been, or rather leaning into the industry type and leaning away from others has been helpful for me to just provide value and also just know what to expect. Those types of business just opportunistically happen to be the ones that have multiples that trade within this space, right? So I could have just as easily sold insurance to software companies, and that would have been a whole different model. So maybe a little bit of fortunate, and I kind of that way. So I definitely tightened up the industries that I invest into. Additionally, what has evolved is the way I vet the people. So I started off with this mentality of I have to be willing to root for the person on the other side, right? I really want to have that person win, and I have to be excited for them to go through this process because it's going to be a stressful process. And that absolutely still exists. I always tell people, like, working day to day in insurance is not exciting, but betting on a guy who's moving his wife and his 2-year-old kid halfway across the country to go personally guarantee it, that's exciting, right? So riding sidecar with that is a lot of fun. So I still have that in there, but what I diligence a lot more on people is communication, right? So what I have generally learned over time is that a lot of these first-time operators are maybe not always the best communicators, and in particular, don't know what investors expect as far as communication. And so being able to suss some of that out has been, an important kind of maturing, I would say, on my side. And not to say that the person has to be baked and ready to go and know exactly what to do, but rather just be open to feedback in terms of what those expectations are. So I've learned certainly to prioritize that.
Yeah, well, we talked a little about the fact that in the early days, maybe some of those concepts, or even as recently as a year or two ago, you had learned those concepts, but maybe some of them you hadn't codified them yet, right?
Yeah. So absolutely. But what I've learned, my original thought with search fund deals was I was like, perfect. This is SBA backed. You can lever it up as high as it can possibly go. Go buy something at 500, 600K SDE. Everybody wins here, right? The returns are great. Let's get off and running. And then what we've seen in the last 5 years is stuff that I intellectually knew, right? It's that I've intellectually heard and seen in textbooks and whatever. But you see, okay, interest rates go up, and now DSCR is tougher, right? So we have less cash flow to work with here. It stresses the business. If we're in a business that what we're selling is a CapEx thing, right? We're going to be more prone to economic fluctuation. So we're going to be hurt on top of hurt, right? Revenue gets smashed down, our debt load gets squeezed up. So what I've learned to be more conservative. Today, what I've learned is sometimes it makes sense to not lever this as high as it can possibly go, right? To over equitize something, right? Like, just because you can't get 80% debt doesn't mean that you should. And so I totally understand it's easier on my side to just say raise more money, give up more equity. But now seeing it play out with a couple of guys, I guarantee you all of them would have said, I wish I would have raised more equity at the beginning. Easier to do that then versus capital calls now, which we've had. And so being able to take a more again, maybe, I'll call it mature approach to I'm okay with potentially less of an upside so long as we aren't overly stressing the business and overly stressing the operator, right? Like I look at what the last few years has brought some of these businesses, and these operators have been stressed the hell out, man. Like it's been a very, very difficult situation for them. And so learning we don't have to take advantage of all that stuff has been important. And even with that said, a 500, 600K SDE deal is just not a good deal for me anymore. And the reason why is not because that's not a good business or that could not be a good lifestyle for that individual. It's just I've seen what that brings and some of the stress that it can bring when you're in the J curve, to where I go, I'm doing this because I like it and it's fun, not because I have to. And there's been too many situations where it has not been fun, right? For the people on the other side that I'm rooting for, right? Who dragged their wife with them across the country and signed a personal guarantee. And so I just go, I'm comfortable without this anymore.
That's great. I think the over equitize versus over levering is definitely a common thread that I think is getting more and more topical as people sprout this idea of, oh, you can take 90% debt from the SBA, get a 5% seller's note, and all you need is 5%. So we're seeing less of those deals. They still come up every so often, but to your point, we have a strong preference for kind of the well-built capital structure that can allow for a lot of volatility in earnings if it comes.
Yeah, which is one of the reasons why I end up kind of playing more time now in independent sponsors than I did before. Because before I'm like, well, I like the economics better of search, right? It makes plenty of sense. You've got the guys that are intimately involved in this business. They're operating it. They're signing the personal guarantee, right? I liked a lot of the stuff on the surface about it, but give me that same look and feel maybe, but over equitize is where my sweet spot is.
Yep. Makes good sense. There's a quasi criteria that you didn't mention, but I'd love to get your feedback on, and that is, how do you think about, a deal from the perspective of how you can add value to the company or to the searcher?
No, that's a good point. So I'm not going to invest in a deal unless, and I can say this one of two different ways, right? Like one's maybe a little bit more aggressive sounding than the other, but they're kind of the same thing. Unless I have an unfair advantage, right? And the only way I can have an unfair advantage is if I'm able to provide value in some way, shape, or form, or unless somebody's just gift wrapping something for me, which has happened before, but I'm not going to count on it in the future. So, how do we have an unfair advantage? And this is conversations that I have with searchers or sponsors or, whoever's got a deal under LOI that's looking for LPs. A lot of the stuff that I can add value on is soft stuff, right? Certainly the day gig is insurance. And so if I can add value by diligencing their insurance, being their insurance broker, saving them money, giving a better experience, providing more comfort that their insurance broker is aligned, has interests aligned with them, then that's great, right? I do weigh that into, my thought process. And sometimes that is the case, and sometimes it's not the case. Sometimes we have operators that say, I want separation of church and state between vendor and investor. And I say, that's great, right? I'm not looking to argue with anybody about that. And then sometimes they say, perfect. I would love my cap table to only be filled with vendors and clients and like creating an ecosystem. There's value on both sides of that discussion. I'm just looking to align myself with the ones that do, right? So if I can provide value, if I can't provide value, then I'm not the guy, and that's fine. Other ways that I'm getting an unfair advantage or I'm providing value is, do I have people already in my network that can be clients of this business? Do I have people in my network that also could be a vendor of this business, right? Provide value there, consultants, and have I just simply seen maybe an economic cycle or a little bit of a life cycle, growth cycle of this type of business before, via clients of mine, via other deals. And when some sort of weird niche issue pops up, even if I can't solve it, do I know somebody else that can solve it? And between a lot of the deals that I've ended up investing in, the answer to that is oftentimes yes, right? So I don't know all the nuances of Service Titan, but I know people that do, right? And so I'm never going to learn all those nuances. I don't care to know them, but I've got 5 people that you can call, today who do side consulting for it, just installed it, will tell you why you should never install it, whatever. And so little things like that, once I layer them all up and add them on compound, it's tough because it doesn't show up on a spreadsheet day one. But it is one of those things where it's like, hey, sometime in the next 6 years that we're doing this thing together, there's going to be something that I can help you out with. So we look to just find out what those are.
Yeah, it's really important to highlight that, right? And we have the exact same philosophy. We're always looking to be supportive with our network, with our hard skills, whether that's M&A or tech enablement. Um, and it's naturally the investment opportunities where we can add that value, we're obviously going to be a better fit. And that's just going to make the puzzle pieces across the deal and across the investment fit much better, right?
Yeah. Yeah. One of the things that you're better at than me, but that we both do and lean on is to try to be connectors of people. And generally, what I've found in this industry is if you look at a cap table of a deal that you're on and you call up one of those guys, they'll go out of their way to help you, right? With advice, with connecting other people, with solving a problem, even if it's not the deal that they're on, right? So I could have an issue with company A, and I could say, oh, well, somebody in company C who's on that cap table or who's running that business, like, let me just call them up and ask for advice. Yeah, man, it takes 5 minutes, 10 minutes. I got you. No problem. I've been there before. And actually telling an operator, no problem, I've been there before, there's a ton of value in that too, right? Like a lot of these guys, especially in the search world, right? They're first time operators. It's their first time doing this. And so when they feel that stress, when they see something coming around the corner that they didn't plan on, didn't like, sometimes in their head, that's a very, very big deal. And just to tell somebody, you just made the same mistake that we all make, they go, oh, well, I wish we would have had this conversation before, but at least that makes me feel better that it's the same mistake that everybody makes.
Yeah, and that's sort of the mantra that the ETA and especially kind of the traditional search ecosystem grew up with, right? And so many of the traditional search investment firms are former searchers themselves.
Yeah, there's let's say in the searcher world, right, you've got plenty of folks that have worked at like a small or medium-sized business who just maybe they took a GM role and they're going like, wait a minute, I'm already running this business. Let me just go buy one that I can go run myself. And so a lot of those guys will typically understand the punches of the mouth that you get a little bit better, even though there's maybe some hard skills around finance and things like that they've got to beef up on. But then you've got some of the other folks that came from investment banking and they know how to do the financing part, no problem. They know how to do investor relations part, no problem. But what's a little bit tougher is when your crew doesn't show up to a job or when you whatever operationally. And so either side of that, you're going to have some things that every business is hard, especially in this market. And so there's going to be stuff that pops up. And so leaning on those people, whether it's through you or me or somebody else, like it's just super important for them.
Yeah, I think that's great. I heard a good quote that was the role of a board member is to put or an investor, right, is to put your foot on the gas when management and the team seems to be getting kind of complacent, and to be a shoulder to lean on when things are going hard, right? So always just keeping kind of that level head and being supportive is so key.
Yeah. Well, even when you mentioned that, so I was at a board meeting last night for a nonprofit, a local nonprofit that I've sat on their board for a number of years now, and we're starting to talk around succession planning for essentially their CFO, but their CFO who's been with the organization for I think like 32 years or 27 years, like some amount of time that's ridiculous. And the institutional knowledge that she has in that organization, you're never going to replace.
Sure.
And so rightfully their CEO and some of the other people there like, well, yeah, she gave us a 3 years heads up, but like this is gonna hurt. Like, what are we gonna do without her? But to your point, like part of my responsibility as a board member, I'm their finance chair right now too. It's like, hey, yeah, we're going to lose a lot of that institutional knowledge, but it also gives us the opportunity to really modernize what that finance department is, right? It really hasn't been, and that's normal. We're having the same butt in a seat for 25 plus years. So let's put some processes. Let's have some conversations with whoever's next up in line, but let's also look at potentially completely retooling this and taking maybe some of mine and some of the other board members' feedback around if you guys were a for-profit that had a CFO turnover in the last 3 years, here's what this thing would look like, because it would look a lot more streamlined. You'd be actually less concerned about losing this one person.
Yep, that's definitely I'd say, parallels to kind of key person issues, institutional knowledge, all that stuff in the small business world.
Yep.
Makes good
Yeah.
sense. I wanted to, because you have such a strong background in insurance, I wanted to highlight for some of the folks listening, what kind of key or unique risks do you look for, whether it's in insurance contracts or if it's gaps, in insurance, things like that. What do you kind of look for, and how can investors think about that insurance diligence process for small businesses?
Yeah. So for my insurance experience, I've been doing this now for like 11 or 12 years. And for the first half of it, I was only repping the sell side, right? Like I was going out and just pounding pavement, writing accounts that were small to mid-sized businesses. And every single year, like 10% of my book of business was selling to a strategic or to a private equity. And I'm sitting here going, crap, I'm losing another client because they're getting acquired, because that's just what's been happening, right? And I would be part of helping provide diligence on the sell side. Here's the good, the bad, the ugly, the nothing but you need to know type of stuff. And what I saw on that side was probably 2/3 of buyers didn't do a good job. And I knew that they didn't do a good job on it because they would have had to come to me for that information, and they did not. And sometimes that would be more problematic, and sometimes it wouldn't matter at all, right? But just like with anything on the diligence side, right? Like you just want to get your arms around it and make sure you have a better understanding. It doesn't mean that it's necessarily going to kill a deal. It might, but so I've seen it on the sell side for the first half, and then really once I started doing work with Rosati and getting more in this field, now it's, I'm doing the buy side. And thankfully my book of business is growing because of that too. So, I've seen a number of things, but kind of my general message to all searchers, all sponsors is, I know you don't want a diligence insurance. Duh, right? Like nobody wants to do that. It stinks. Lender's not maybe necessarily requiring it. Legal might not be requiring it. So why would I add another thing? Whatever. The reason why is because it can matter, right? And I would say 80% of the time it doesn't, and 20% of the time it does. And when it does, it can sting. And so what I do, as well as some of the other names that you kind of hear in the space, is we'll diligence out commercial insurance, right, which is your property, liability, workers' comp, auto, normal stuff there, management liability, and health insurance too, if the organization actually is big enough to have health insurance and includes that. And so what we'll do for something that is a company doing $5 million a year is certainly different than what we'll do for a company doing $500 million a year. And there's a little bit of a sliding scale there. But nonetheless, you need to go through the same processes. And so some normal things, like super normal, just kind of off the cuff examples of stuff that we see in the searcher space is, you're going to be buying, let's call it, you're buying a manufacturing facility, and there's going to be a warehouse that these guys have been in for 25 years, and the value on the insurance of that warehouse has not been updated in 15 years, right? It says that thing should be rebuilt for 400 grand. It now is getting rebuilt for 2 million. So not only are you underinsured, but by the way, the lender's not going to, the cost of that actually really doesn't matter that much, right? Because property insurance there's dirt cheap. If you are down the street from where I'm sitting right now, coastal Florida, that is a material cost adjustment, right? And so making sure that you as the buyer and the seller know what that cost adjustment looks like is important, okay? And, this as well as some other things that adjust insurance costs on a 500, 600, 800 grand SDE deal can sometimes be material. So I'll tell you a story. So that first deal that I did with Rosati, that I'm, again, still involved in, trailer manufacturing company. The old owners were buying a general liability policy, but that general liability policy only covered slips, trips, and falls on their premise. It did not cover the actual manufacturing of the trailers themselves. And that was done purposely to save money. Okay. They knew that they were doing it. They just didn't want to spend the extra money on insurance. They were able to send people out proof of insurance that showed, hey, we have this policy, off we go.
So just to make sure I understand that, if someone injured themselves while using, a CNC machine or whatever types of machines they use, to build the trailers, that would not have been covered under the policy.
That actually would have been, that's workers' comp. They, by the state or by law, have to buy that. But worse than that, what it is if they had manufactured a trailer and there was a defect in that trailer, right? So let's say it's driving down the road and an axle falls off and causes an accident, and somebody gets seriously hurt, they die, whatever. There's no coverage for that, right? And so we look at the thing. By the way, if somebody cuts their hand on a CNC machine, that stinks. You can afford that cost, but you have to buy the insurance anyways. With what I just described with the trailer axle falling off, you can't afford that, right? Like, that's just, your business goes down. And that coverage they weren't buying before. This is not a big business, and so it's the cost of that coverage and the whole scheme of things, right? Which, again, is easy for me to say because I see some super expensive insurance policies sometimes, but the cost of that was about $20,000 a year to get that added on. And because they had never bought it before in the past, operator, us as a buying group even, said, well, we don't want to buy in a stock deal old liabilities, right? Like, you made trailers all this other time before us. Why would we want to start buying these liabilities now? So to sell off that tail liability, that was about a $60,000 expense. So we're looking at year one an $80,000 hit on a company that I think it did like $600,000 in SDE. That does materially affect earnings in a business like that. It affects that debt service coverage ratio. It affects cash flow planning, all this other stuff. And so we had to go back to the sellers and renegotiate a fair deal, right? And a fair deal can be a number of different things, but as long as you have that communication and understanding, you can figure out what that is. So we came to terms on the resolution there, which was good. But yeah, that was just like my first deal sidecarring as an investor. And I was like, well, damn, I'm glad we did this, right? I'm glad we actually took a look at this, because if I wasn't on that cap table, that would not have happened, right? And so you would have learned a lesson the hard way on it. On some other things that I've seen before in the past, actually a buddy of mine is going through the process of selling his business right now. It's supposed to close in like 6 days. And he's an older guy, and he's had some significant health issues over the years, and I've done his health insurance for him for a long time on his business. And his personal healthcare costs are about $600,000 a year. Now he has Blue Cross Blue Shield insurance through his business and whatever, and whatever 50 people that are sitting on this plan. So it doesn't look like $600,000, right? Because it gets split up into a monthly premium between everybody. But when he sells his business, he's no longer be the operator, right? He's leaving. He's going to go to his own private health insurance plan after that. So that plan spend is going to go down $600,000. So the buyer of this business is going to catch a lift, right? There is arbitrage to be had there by them essentially removing the sick guy off the plan. So it works both ways. It can work both ways. Obviously, we're trying to minimize our downside. Making money or increasing profitability by doing that is not a common thing to do. But just generally having somebody that looks at this stuff to have an understanding of it is good, whether they're on your cap table or not, right? There's a lot of good competitors of mine, friendly competitors out there that do this stuff, but making sure that you have somebody who knows the search sponsor space, understands these types of deals, understands what is normal in these deals is super important, right? Because I also have coworkers, competitors that do insurance around transactions, and they're doing it for $150 million deals. That's a different world, man, right? Like, you've got to have somebody who actually knows this space.
Yeah, that's so critical, because it's also a balance between, you don't need to buy every single policy, right? You got to just shift the right risks.
Yeah, that's certainly part of it, right? And to your point, if you go up market, or if you go with like an actual PE fund, right? They're taking institutional money that's requiring them via contracts to buy certain insurance policies, and maybe they're going to feel more comfortable doing that, and they're going to be able to absorb the cost more. Whereas you get into search world, and it's like, well, it's a guide, right? It's not a fund. They're not taking pension money, right? It's like, it's a friends and family rates sometimes. And so understanding what is normal, and this thing exists in all realms of my business, but it's like being able to tell somebody, here's what's normal and what other people do, maybe here's best practice and then here's what's normal. It's good to understand that measuring stick.
Yeah, that's exactly right. And that's kind of almost what every diligence process is meant to be about in some way, shape, or form, right? So here's a esoteric scenario I'd love to run by you. We probably about 3 years ago, I was looking at a deal. It was about a 5 million EBITDA business or so, and it had a self-insurance program for healthcare. So they self-insured and had their own little insurance company within the business. How often do you come across that in the search world? And if you did, what would you think about that from a risk standpoint?
So in the search world, it's less common. In the sponsor world, it's more common. And I would even say in the same business, it's more common today than it was 5 years ago, right? So the insurance market, is pushing people to self-insure or at least to take on more financial risk and participate in that financial risk. And so as an insurance broker, I love it because I have an unfair advantage, right? Like I can look at this stuff in a different way than a buyer that doesn't have my experience. I just know how to work that system better, right? The same thing actually exists with people that aren't self-insured, but they have all the markings that they could or should be, right? Like that is a good way to potentially save money. Now, one of the things that you got to make sure of, you got to make sure that you plan for on that stuff is when you are self-insured or when you're taking on larger deductibles at the company level or whatever, you have to fund for the worst case scenario year one. Okay. And so within that health insurance plan or within the auto insurance plan, I don't care what it is, if you're taking on as an organization $100,000 in risk in year one, let me tell you when you're going to hit the max liability on this thing, right? It is year one when it sucks the most. It's not going to be in year 8 when you've paid down debt, you've built up a nice fund. Absolutely not. It's going to be at the worst possible time.
Yeah, it's a Murphy's Law sort of scenario.
It's insane how many times I've seen this shit happen, where it's like either year one going into self-funded insurance or right once the transaction happens. Certainly. Now, the long-term advice that I always give people is don't buy insurance for stuff that you don't have to insure, right? Unless the law is making you do it, unless a contract is making you do it, or unless your own financial position is making you do it, or risk tolerance, I guess you could call that too. Don't buy insurance, right? Like that is, they're paying me and this is profitable. They're paying their own people. They have investors. That is profitable too. If you can reduce or eliminate that expense, that is great, right? But the only way you can do that is to put yourself in a healthier financial position. So making that shift to be self-funded, yeah, man, it's great. As long as we can responsibly get you there and do it the right way and set expectations the right way. And part of that is aligning owner/CEO with CFO, with HR director, with whoever those stakeholders are, because we've all got to be on the same page because they're all going to be impacted.
That's really interesting feedback. I have not seen a deal yet where the company has a self-insured setup, but my sense is they'll be coming soon, at least not for search fund ventures. I mean, and prior in my career, this is where we've seen it.
Well, so one of the things that you'll see in roll-ups is the insurance, and in particular moving to some sort of self-insured model or deductible models, like taking on more financial risk in the plan, is part of the arbitrage, right?
Mm-hmm.
And so in the same way that you have real estate arbitrage, in the same way that you have even other administrative overhead where it's like paying for accountants and attorneys and payroll services and whatever else, insurance brokers, I've seen roll-ups where it's, they're saving a couple $100 per employee per month in self-insurance arbitrage game. And you go, yeah, you layer that up after enough deals, right? And these things, obviously I'm involved in some stuff that can get big, right? After a couple thousand employees, you're like, well, dang, dude, right? Their insurance program, they were just able to net out $6 million in earnings on. $6 million matters, right? And that same methodology, that same mindset exists as you go down market. Yeah, the dollars aren't the same amount of dollars, but the percentages are all the same.
Yeah, it's a fixed cost center to some degree. It's kind of semi-fixed. So if you can get some leverage over it, that's absolutely the kind of sense of a roll-up. Do those shared services. So yeah. Well, look, we're coming up on time here. So I guess any last comments you want to make or stories you want to share before we hop?
No, man, I could talk about this stuff forever, obviously, because it's fun, right? It's a lot more fun than just insurance brokerage still. So, no, I appreciate doing this stuff and giving me the opportunity to do it.
Yeah, absolutely. Thanks for coming on, and hopefully everyone learned a good bit about how to look at the insurance setup of businesses they're diligencing.
All right, see you, dude.